The real estate market has continued to evolve in really a great way with buyers. Let's jump into the October data and let's go over some really cool new news that was just released. So, first of all, we now know almost 60% of homeowners has stated that they would rather just rent the property rather than sell it. That is a mind boggling amount of homeowners not willing to let go of their property. And of course, 20% have also stated that it would be nice to have extra income from a renter. So, overall, why the heck would people decide to keep their home versus just to go sell it? Interest rates. I mean, look, not because they're higher today, it's because they were lower. 3%, 2%, 4%. Why get rid of that? That's realistically never going to go back to those low interest rates for the future. And so, well, it makes sense to go ahead and let's try to rent it out. And that makes an impact for inventory and future home buying in the next 5 years and onward. But let's go into the next set of information, the percent change in home values. So, appreciation, right? What's happening now nationwide? If you go all the way back to the end of last year, you go from July, August through December, a little bit into January. That was like the best time to have purchased because home values did decrease nationwide, and you could snatch up a home. But since February and onward, nationwide appreciation absolutely occurred all the way through, and even in the Austin area from February through more of the summertime, we saw an increase in appreciation as well. Now, it's not until just recently we are seeing in the Austin market that we're an outlier. We don't fit kind of the norm nationwide. We see absolutely the ability to have savings on a home. And into fourth quarter, we're starting to follow a normal housing trend. And we see that also with these sources. So here's three sources here. Here's another three sources, just showing nationwide that there is no housing crash or anything like that. Even with the higher interest rates, we do see appreciation all the way through nationwide. But here's the other cool factor: quarterly gains added almost $13,900 to the average US homeowner. And now they have about $290,000 of equity. Amazing. I mean, that's just a whole lot of money. But that factors in to the next item here, and well, interest rates. We're going back to that. So they did a study, and one of every four buyers they asked, okay, do interest rates impact you? And they said no, or at least one of the four, or 43% of that quarter, said that they don't need a new mortgage, so interest rates don't matter to them. And so you still see the housing market continuing to move. That's a huge percentage of buyers that are out there. All right, now this is kind of obvious, at least to me. Mortgage rates are less relevant to older homeowners because baby boomers, look, that age group who owned a home for such a long period of time has a ton of equity. So look, they don't really need to worry about the interest rates. They can put a lot of that equity from the last home towards either a down payment, and their monthly payment is still low and they can still live within their means. That goes into, let's shift into the Austin market. Let's be specific to and hyper focus to our market. First of all, days on market. So how long did a home take to sell? September, it jumped up 62 days. That is normal in a normal housing market. We start to see the fourth quarter, end of third quarter into fourth quarter, that will continue or should continue to increase. It should be harder for sellers to sell in a normal fourth quarter. And so that is expected. Now, new listings, there was a decrease of 8.7%. That's expected. The close price to list price ratio was 98%. So, hey, the home seller wanted $500,000. Did they get it? No, they got less. That also makes sense, at least in Austin. And that is not happening nationwide. There's still a lot of cities around the United States that still have multiple offers. They're going well above the asking price. And also, why? Inventory. We have a lot more inventory because of new builds and new construction in our city. And other cities weren't able to build as much as we did in the short amount of time during the pandemic. The median list price is $496,000. The closed price is $450,000. And if you notice, there's a trend, right? All the way from April till now, you see 460, 460, 475, 488, 460. So, and look, it looks like it's leveling out. Active listings versus sold listings. We have a lot of active listings, 11,209 active listings. We actually have 2,457 more active listings compared to pre-pandemic. That's 28% more on the market. That's a lot of competition for sellers. That's where people are noticing their days on market. That's why they're noticing they're not getting as much as they want for their home. And lastly, months of inventory has increased. Again, more competition for sellers. That's at 5 months. Let's go on. Sellers, this is kind of just a repeat. Again, Austin, one of the few cities that have been hit harder. So it's a little harder to sell. We already know about the more active listings on the market. Days to sell, I already told you they doubled since last year. So that's a negative for a seller. More inventory, again, that's negative for a seller. More competition. Interest rates, they jumped up this last month from 7.1 to 7.7 to 7.8%. It's more expensive for a buyer to purchase, and that's going to hit your pocket as a seller because you're either going to have to forfeit more money from closing costs to help the buyer buy down their monthly payment, or you're going to reduce the reduce the purchase price, the sales price, because you have all this competition. So your competition is going to reduce the price. And if you stay at elevated prices from pre-pandemic, it's never going to sell. Also, we know that there's more rentals hitting the market. Why? Because 60% from earlier said that they would be willing to not sell their home and just put it on the market for rentals because of their low interest rates. So you see this pattern starting. And we notice that the rental market, there's starting to be since there's more competition, we're starting to see a decrease in the rental prices for now. We'll see how 2024 plays out. Also, buyers, they do have a lot more negotiation power. This increase from last month, now buyers have 70% of the negotiation power, and sellers, you only have 30%. The selling strategy absolutely must be creative and must work. So what we're doing right now is we have a special strategy where we're implementing, and our sellers, they're able to offer a buyer lower interest rates, much lower interest rates than your competition right now. So like on our listings, it's at 6.25%, while other listings are at 7.5 to 7.7%. So if you're a buyer, whose home are you going to go after? Well, the one that's more affordable, right? Buyers, again, Austin is one of the few cities you can get a great deal. In other cities, again, there's multiple offers. So you can snatch up an amazing home at a great price. Also, what's the best month to purchase? Q4 now, October, November, December, absolutely great. And into January and a little bit of February, then it starts to go up again. You'll get the largest savings, and interest rates. Yes, of course, they did increase from last month, but our clients, they're receiving interest rates between 4.25% and 6.99%. Last week, we had a brand new client with a new build receive 4.75% interest rate and all the closing costs. We negotiated this, all the closing costs absolutely paid for. So there are amazing savings to be had. You just have to ask us. We'll help and guide you on where those are at. Also, there's more inventory to choose from, and the buying strategy is completely different for you. We also mentioned, again, having the interest rate reduced at no cost to you as the buyer. You are not paying 4 points, okay? That's not coming out of your pocket. And investors, it is a difficult time to find investments in Austin because it's an 8%, 9% interest rate. You just have to know how to play the game. So if it's a DSCR loan, you are allowed to get 2% back from the seller and put that towards buying down the interest rate. Then it starts to make more sense, right? So if you know how to play the game as an investor, you just ask us. We can guide you on where the purchases make the most sense. I did have a month to over month price change here because you can see nationwide, we do have an overall appreciation. Again, that is nationwide. That's not necessarily Austin's market. So if you have any questions about the data or you're a past client and you're curious about what's happening with your neighborhood, or you're just a seller and you're not really sure if it makes sense now or if you should wait, or even a buyer and you're not really certain how to implement the strategies, ask us. We're here for you. All right, see you in 1 month.